If you log into your banking app every single day to make sure your credit card balances sit exactly at zero, you already know the exhausting, low-level anxiety that comes with trying to maintain a perfect credit score. That daily obsession comes from a common misunderstanding. A FICO score is not a grade of your personal financial worth. It is simply an algorithm designed by lenders to predict your statistical risk of defaulting on a loan within the next 2 years. Academic researchers who study behavioral economics have mapped this out. Actual long-term creditworthiness is rooted in observable human traits, specifically your patience and your trustworthiness. It has very little to do with the daily gamification of your current balances. Before you even attempt to game the algorithm, your foundational baseline relies on your legal right to an accurate credit report. Under the Fair Credit Reporting Act, enforced by the Consumer Financial Protection Bureau, you have the right to dispute incomplete or unverifiable information and have it removed. The internet is heavily saturated with tactical hacks designed to achieve a perfect 800 score. But executing these maneuvers perpetually can actively sabotage the long-term growth of your credit profile. Understanding the difference between short-term algorithmic manipulation and long-term profile building determines whether you are managing your finances or letting your finances manage you. Let's examine the most popular utilization hack on the internet. It's called A0E1, an acronym that stands for All Zero Except One. This chart shows the counterintuitive mathematical reality driving the strategy. If you pay off every single credit card so they all report a $0 balance, your FICO score actually drops 10 to 25 points. The algorithm applies a specific penalty because it sees no recent revolving activity. It cannot judge your credit management if it thinks you aren't using credit at all. To bypass the penalty, the AZEO strategy requires you to pay all your cards down to zero, except for one designated card. You intentionally leave that single card with a microbalance of around 1% of its total limit. By showing proof of responsible, highly controlled usage, your score shoots up 20 to 40 points almost overnight. Timing is the mechanism that makes this work. You have to pay down those balances 3 to 5 days before your statement closing date. The statement closing date is the day the bank reports your balance to the credit bureaus. That is completely different from your payment due date, which is the day you actually have to send the bank your money to avoid late fees. While AZEO is mathematically proven to generate results, executing it requires exhausting calendar micromanagement. You must disable all automatic subscriptions and monitor your accounts daily to prevent a surprise charge from ruining the zero balance requirement. AZEO is a highly potent tactical maneuver to satisfy the algorithm. Relying on it as a permanent financial lifestyle is completely unsustainable. Running the AZEO strategy month after month, year after year, introduces hidden structural damage to your credit profile. When you consistently report artificial zero balances to the credit bureaus, credit card issuers look at your profile and conclude that you simply do not need their money. Because lenders see zero utilization, they have absolutely zero incentive to grant you credit limit increases. A credit limit increase is when a bank raises your maximum borrowing cap, which naturally lowers your overall utilization ratio over time. AZEO permanently stalls this organic growth. Warning tone. The consequences escalate if you maintain the zero balance illusion too long. Accounts left at artificial zeros for 6 to 12 months risk being closed entirely by the bank for inactivity. The alternative to this micromanagement is natural reporting. You use your cards normally for your everyday expenses throughout the month, let the balances post, and simply pay the statement balance in full on the actual due date. Natural reporting demonstrates active, responsible usage to your lenders. That steady volume is the exact trigger that encourages banks to grant massive, unsolicited credit limit increases. Sacrificing organic, long-term credit capacity just to stare at an artificially boosted 3-digit number on your banking app is a strategic error. The primary barrier keeping people stuck in extreme micromanagement is psychological anxiety. They fear that letting a balance report naturally will cause their score to drop. This graph shows what natural reporting actually looks like. Your FICO score organically waves up and down 10 to 20 points every month based on natural spending spikes. But if you pay in full, it stays safely trapped within the excellent tier. That monthly fluctuation is entirely harmless. If you are not actively sitting in a bank office applying for a new loan, a temporary 20-point dip literally does not matter. We see this same trade-off between intense friction and high benefit with other credit tools, like your federally guaranteed right to a security freeze. A security freeze is a lock placed on your credit file that prohibits the release of your report without your express authorization. It is the ultimate defense against identity theft, but it creates massive daily friction by actively blocking your own ability to get instantly approved for new accounts or services. Whether you are freezing your report for security or micromanaging your balances for algorithmic perfection, extreme optimization always extracts a heavy toll in daily friction and lost flexibility. To make this actionable, we need to map exactly who should be deploying the AZO hack right now and who needs to drop it. If you are exactly 30 to 60 days away from a major credit application, like a mortgage refinance or an auto loan, you fit the profile of the imminent borrower. This split-screen comparison shows why that specific narrow window justifies the intense effort. Bumping a score from a 724 to a 761 using AZO can drop a mortgage rate by a full percentage point. Over the life of a typical loan, that optimization translates to $47,000 in saved interest. For the imminent borrower, micromanaging statement dates is no longer a meaningless hobby. It is a highly lucrative 60-day financial sprint. When tens of thousands of dollars in lifetime interest are on the line, short-term algorithmic manipulation is the exact right tool for the job. If you are not applying for a major loan in the next 3 months, you belong to the alternative profile, the set and forget builder. You need to abandon the AZEO method immediately. Stop checking your score every morning, delete the calendar reminders for your statement dates, and return to foundational financial habits. The rules of engagement for the builder are simple. Use your cards normally, pay the statement balance in full on the actual due date, and let your balances report naturally to the bureaus to trigger future limit increases. True financial power is built on the long-term, verifiable demonstration of your trustworthiness. It is not built by playing mathematical games with statement dates. A credit score is a tool to be deployed when you need it, not a trophy to be polished on a shelf. Put on the restrictive, highly tailored AZEO suit for the loan interview, but wear the comfortable clothes of natural reporting for everyday life.